Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, December 20th, and we are coming at you several days before the Christmas holiday. We do have a full week of trading. We are off Monday. Well, we may be on, but the US markets will be off on Monday, as with many others around the globe. We have real GDP on Thursday. We have PCE on Friday. And today we had, or I guess last night, technically, I guess today, maybe if you're on the East Coast, last night, me on the Pacific Coast, we had the Bank of Japan come in and basically implement a form of quantitative tightening that they have not done in a very long time. So I'm going to just pull up a tweet. What's the easiest tweet to show? So this is probably the easiest one. We'll dig into this later on in the week, depending on the impact. But you can see that the Bank of Japan has been basically has widened the yield curve for their 10-year bond. And as you can see, if you look directly at the markets, the impact was quite crazy. Last night we dropped. We're obviously back near recent levels, but in layman's terms, what this means is the Bank of Japan is implementing quantitative tightening. This is the first time they've done this in quite some time. As you can see, actually, well, I mean, the last time they did it was in 2020, but that was still a shock considering obviously it took them quite a few years to implement it prior. So what this means is that the Bank of Japan is worried about inflation, as is the rest of the globe. And with the Fed and Bank of England and other EU central banks, creating a hawkish tone and forcing quantitative tightening, onto banks and the consumer and lenders, et cetera. This is going to exacerbate that trend, considering now Bank of Japan is now on that trend, and Bank of Japan consumes a lot of treasuries and bonds around the globe as well. So now that they're getting more yield in Japan, that will bring money back to Japan from other nations around the globe. So it could create a more of a liquidity crunch in international markets, in addition to the fact that the Bank of Japan, who, for reasons we're not going to get into, have a very, very direct role in global economic policy. So just know that this is very significant, and it is on the quantitative tightening side, and it will likely force money back into Japan, and away from abroad investments. And, that abroad, a lot of that goes to the US. So pulling US liquidity, not exactly what you want to see. So big news cycle here. You'll continue to hear more about this, and that's why we saw the volatility that we did last night into this morning, and we'll get into that in a second. So sentiment is mostly bearish to neutral. Obviously, Dogecoin slightly, in the short term, very random, but a lot of neutral, a lot of bearish on the charts. Bitcoin has, not entirely grown worse since we talked yesterday, but still quite bearish, not much of recovery. Ethereum is definitely creeping back into that neutral level, and trading volume slightly higher, tweet volume slightly higher as well. Not seeing the same for Bitcoin, which is probably why we're seeing sentiment pick up a little bit more, but we are still bearish. Sentiment for Ethereum as well as Bitcoin. So something to take with a grain of salt until this, breaks above 50 and reclaims 50, confirms at 50. I am still in the camp of bearish Ethereum sentiment. So looking at DXY, we can see it, if you kind of squint your eyes down here, the RSI trend is exactly right on the downtrend. And typically, like I said yesterday, we'll see this bounce on top of the trend. It could accept back lower. That's certainly possible, but typically we will see this pop right back off, which would bring DXY off of the support level and higher into something like that. And of course, if it breaks lower, then we are, forced into a pattern like that. So I am still bullish on the dollar. I don't see any reason not to be currently. But I guess, and the weird macroeconomic situation, the Bank of Japan situation weakens the dollar because it moves money back to Japan, which a lot of it was probably in the dollar, in high yield American assets. So that could definitely cause some wonkiness with the dollar, which is something to watch out for. So I'm preliminarily in still bullish DXY camp because I don't think the BOJ situation is going to be that massive for the dollar, but something we definitely have to continue to monitor. And I'm not as bullish DXY as I once was because of the potential red herring that we have, but it still seems likely that it moves higher. But we do know our trigger for bullishness or bearishness in the short term. So looking at equities, we've got to zoom in. We've had quite a steep drop recently. So basically what happened last night, around 7 p.m. my time, 10 p.m. Eastern, the BOJ announcement came and we dropped about, more than a full percent. Since then, going into the morning, we have recovered nearly all of that price action. We're still slightly lower than when we dropped, but we're right around the previous daily close yesterday and holding that level, which is very important. So the previous daily close is, now acting as some sort of support and resistance. Now currently supports, bounced off the VWAP, which is typically very important for these types of short-term moves, and we're back, and we did catch the previous high from the VWAP yesterday. So where the VWAP was before the daily close. So that's typically a target. So and we're still within the range that we had defined yesterday as well. So interestingly enough, the obvious triggers for bullishness or bearishness when it comes to equities is, you want to hold the VWAP right here, which we're doing now. You want to get above the previous daily close, which coincides with the POC. And then you want to move back higher and get above this 200-day moving average and kind of, form a little bull flag and get above 340. Now, the bearishness would be if you firmly close beneath 38.10, 38.12, which is both the POC and the previous daily close, then you're probably headed back lower for support at 37.70 or 37.75 as it was yesterday, and then of course if that level fails, then you're headed lower. So the interesting thing is we got sent down. Kind of looks like some potential deviation. Inverse head and shoulders pattern forming there. We did break the neckline, but we're rejected back down. And we're still, within the range that we broke into yesterday morning and have yet to break out of it. So bullishness is if we break out of the range. Bearishness is if we break under the range, else you are stuck in this range for the time being and likely at the mercy of the dollar. And just to look at the 4-hour, catching a little bit, where you want it to. So need to see that hold 103.8 or things are going to get silly for the dollar and equities. So we know what equities are looking like. We are currently range bound until, a further catalyst comes. Does look a bit more bearish to me, strong rejection, both of the 200 moving average and the top of the range, straight back down to the previous daily close. Now we get to see what kind of action the previous daily close brings us. So looking at Bitcoin, very similar to yesterday, but right around that time when the BOJ action was sending us lower, crypto really didn't care, which I thought was very interesting last night. Bitcoin, had, if you look exactly at the times in which this dropped, it was 1900, which is 7 p.m. Pacific time. And if you look at 1900, we're already at the top of the, where we traded at, into this morning. So very interesting there. But if we look closer, still, within the wider range. So if you want to think about the range from 16.5 to 16.9, which we have multiple taps, a lot of trading within, deviation down below, short deviation here, and then deviation above. So we're still within this range, and I'll go ahead and actually make it wider on your eyes. So the range 16.9, 16.5. The only way to consider, bullishness is if hold 16.7, firmly close above 16.9 and attack 17.1. And then bearishness is continue to break down, get under 16.5, flip that to resistance and head lower and confirm, under 16.5. Well, I guess it's technically 16.550. So just to be more exact with exactly where our range is. So, similar to equities, we are range bound until we flip resistance to support or support to resistance. And we know that those levels are 16.9 for the high end, 16.550 for the low end. If you're looking for longs or shorts, you might be able to get a short down to the low end of the range, but we need to see how this is really 17.8. If 17.8 fails, then you're at 16.7. I'm sorry, if 16.8 fails and you're at 16.7, 16.7 fails, you're at 16.5. Now let's move over to ETH. So ETH, a little bit, cleaner price action, less compressed, definitely easier on the eyes. I don't think anyone's arguing that. And so similar for ETH, still stuck in the range, very similar to Bitcoin. So 1220 high end, 1150 low end of the range, and then we have a kind of a mini little support spring system here right around 1200. And I guess technically you could draw, I guess if you really wanted to, right around this previous daily close is kind of a mini range. So, but for all intents and purposes, this is the larger range. You've kind of got deviation in and out of this smaller range. So, the math says probably headed back. The analysis says, probably headed back something like this. But we do know from having defined our range that if we want to continue bullish, hold the VWAP, get above 1220, hold 1220, move higher towards 1236, potentially 1250 or 1240, so basically 1240 to 1250. If we are bearish, then we are, of course, first step is accepting back into this lower range, and then eventually moving lower and flipping 1166, 1167 into resistance and heading lower towards 1150. And then, of course, 1150 has to be flipped into resistance to continue the path lower. So, there's no real obvious sign of what's going to happen. This bullish pop to me doesn't make a whole lot of sense. It only makes sense if the DXY continues to suffer, which, of course, we defined is definitely plausible. Equities, clearly did not agree with the Bank of Japan decision yesterday. And, we recovered back to, where we opened on Monday, and were rejected. So, until we can get back above that Monday open, which coincides with the high of today, I'm not bullish, and I don't think anyone should be, for the time being. Maybe we get another, kind of quick pop to 17.1, maybe 17.2. Maybe Ethereum can, sneak up to 1240, 1235. Is that plausible? Sure. But I'm not, really going to bet any of my money on that. I would rather look for shorts higher. And I've actually already been laddering in very small into some shorts just in case we get a quick decision coming soon. But I'm not extremely bullish on this entire outlook, especially headed into the end of the year. We, of course, do have two potential catalysts that could be positive Thursday and Friday. But judging by the immediate reaction, what I perceive to be the long-term market impact and where we're at in the cycle, I'm not bullish anytime soon. And I think that this pop was a reaction to wash out a lot of shorts, stack a lot of longs near resistance, and then obviously ruin their hopes and dreams on a reversal lower. So that's my current feeling and outlook. We'll have to see how it plays out to tomorrow, but my feelings, and we'll continue to update things in the Trade the Chain community every morning, every afternoon, and every evening. Of course, everything was already in there very early this morning. So good luck to everybody. We'll continue to monitor and update as things come in. But I am not feeling too much of the bullishness that we experienced this morning. So good luck, happy trading. See everybody tomorrow.